so much for joining us today. We've started the broadcast, and we have Nitin here from Elevate Capital in Portland. And the session that we are going to talk about right now is how to get investments from the West. So it's a huge question since most of the companies that we start off in Asia is either registered in Singapore or Canada or US or somewhere in the European countries. So it's a key part that we understand how to get the investments from the West because most of your companies are incorporated there. And that is exactly what we'll be talking right here. The nuances of it and how it happens, all of it. Whatever questions you guys have, just put it in the Q&A session so that I can moderate it to Nitin and he can answer it for you guys.
Great.
And just for a clarity check, if you guys can hear the screen and clear, just give us a thumbs up. So just react thumbs up there so that we know. Yeah, thank you. We're getting good. Yes, Nitin, I'll give it over to you. Just give a brief introduction for yourself to everyone, and then we'll start over the questions.
I couldn't hear you. Could you repeat, please?
Nitin, just, I'm handing over the stage to you. Just give a brief introduction about yourself and Elevate VC, and then we can start off with the Q&A.
Sure. So you already know my name, so I'm not going to repeat that. But I'm originally from Delhi area, born and raised in Delhi, and got to Silicon Valley back in the mid to late 80s. I'm a computer science grad. Tried my hands at 2 startups in Silicon Valley, and then moved to Oregon in the late 80s, and founded a company called First Insight, which is still around. It's in the healthcare IT SaaS space, within a decent operation in Pune, India. I got into investing in the mid 2000s when we started the local Thai chapter in Oregon, and I was one of the founders of Thai Angels, and made a bunch of investments in using in SaaS tech, and launched Elevate in 2016 with an intention to invest in women, minorities, and people of color. Obviously, in India, everybody's a person of color, but not in the US. And made some really good investments, including RFPIO, which I'm sure Ganesh has already presented. If not, he will be. That was one of our first investments and a very successful investment. We have made about 45 investments so far out of the first fund or first family of funds. 60% are in tech and big chunk in software as a service type companies. Our second fund launched earlier this year. We've already made 18 investments. Our typical check size is anywhere from $250,000 to $1 million as a first check. And majority of our investments are actually in women-led companies. Again, the thesis is healthcare, technology, and software as a service is a big component of our investment. We invest only in US headquartered companies. We have investing companies that have a large India operation. RFPIO is one of them. There's a company called Growth Plug that has a pretty big development operation in Kochi. I've spent a fair amount of time in India over the last few years. I was chair of Thai Global, so I spent many months in India over the last 4 years. And I hope everybody is safe. We're very concerned and trying to be as supportive as we can from here to help with this COVID crisis.
Thank you, Nitin. So, start off with a basic question, like a very basic one, and then we'll go into the nuances and details of it. So while you're investing, you told me that you invest in companies which are typically headquartered in US. That's most of the companies in India are headquarters there in Delaware, specifically in Delaware. So apart from that, what is your favorite kind of investment when it comes to the founding team? What criteria do you look out there?
Sure. Well, we like to invest early stage. So pre-seed, seed, we look for teams, not individuals. So we like to see at least 2 co-founders. We like to see a female in the co-founding team. And if you don't have a female, then we make you sign a diversity pledge that this says that you're going to bring somebody at the C level at some point. We look at the business problem that you're trying to solve, right? So and we like entrepreneurs that have actually been in that business, where they've discovered the problem. So Ganesh is a good example where, he actually found the problem while he was working at another company here in Oregon. And we also look at, the market size, obviously. We're not chasing unicorns. So we're okay with, a few $100 million market, 500 to $1 billion market, where your solution is either disrupting or enabling, right? Mm-hmm. And so, for example, it could be that a lot of the work is done on paper or spreadsheets, and you're kind of disrupting that. Enabling could be, it's a legacy business, it's all legacy software, and you're coming up with a SaaS solution. So, and you have a bit of a head start against anybody else. So that's what we look at. We like early stage because our thesis in Elevate is mentor capital. So most of our investors, including myself, are all exited or successful entrepreneurs, and a lot of our backgrounds are in software as a service.
Yeah. And one more question, this is something that's been on my mind for a long time. So, I've been in talking with a lot of VCs over there via SaaS Insider and the Insider Circle community to the, in the West Coast in Europe. And one thing that I've noted down is the huge chunk of investment, why they don't want to do in companies who are, even though they are headquarters in India, most of the operations, headquartered in US, most of the operations in India, but they shy out in those investments. And the major reason happens to be the trust factor there. And the trust factor, as in, like, if I'm in Portland, you're, right next to you, you're more inclined to investing in me because you guys see me right there. And how can when we go for overseas investments, how can we maintain this, trust factor? What can help you guys increase that?
Well, so we don't. So with COVID, the COVID crisis, obviously the need, and with Elevate, it's always been true, because even as a first fund, we made few investments outside of Oregon. And the reason we concentrated in Oregon was we're a small fund and we're trying to prove a thesis. So we said, start local and then eventually become national and then eventually become global. So we crawl, walk, run. And this is what I advise the entrepreneurs to do as well. But one of the things that we look for is to have, some presence, physical presence in the US. So whether it's one of the co-founders moving to the US, or they're creating a team, or there's a plan to create a team, like maybe the sales and marketing team, there's some physical presence rather than just a physical entity, which they call the headquarters. That's not enough for us. Now that may change. We may change that, but right now that's kind of what we look for is that, having some physical presence. They don't need to be necessarily in Portland. That close proximity we've shown with COVID, and right now in our fund too, majority of our investments new investments were outside of outside of Oregon, so to speak, because everything has gone virtual. Even our investors are gone virtual. So that's not as big of a showstopper for us. But for companies coming out of India, particularly out of India, there's a perception that you write a check to an Indian company, you'll never see the money again. And that is the honest to God truth is, those concerns. And even for me, I mean, I have a company in India and I still have reservations, right? That piece, I think there has to be a bridge. There'll be a bridge to see some successes, some big hits. I mean, like Zoho is a good example, but Zoho, that's always just one company. But having startups who raise money from US investors, do some relocation. That's starting to happen. There's a few examples of that, whose names of those companies I don't remember right now. But that those are early stage companies that raise money from the US, and a founder, I forget the name, there's some cloud infrastructure company out of Delhi that has done that, and they've done it really successfully. There's another company that I know. The founder lived in the US, went back, worked for Twitter, went back to Delhi, raised money in the US, and it's done it that way. One thing I wanted to let you know is I just got an alert today that there is a international entrepreneur parole program that has been reactivated by the Biden administration, which should be really good for Indian entrepreneurs to actually send one of the co-founders if they're deciding to expand into the US market. I think that's great. You get 5 years. That adds to the comfort level for investors like me to say.
That was actually my next question.
Yeah,
because
I just I don't go, what a coincidence, but they're
yeah,
never
I was just reading this yesterday, and I was like, over the sky, 2.5 years, then we can extend it for 2.5 years. So I'm happy.
Right, that's long enough time to really, and we've made investments. So Growth Plug, the founders are on H1s, and they had to transfer their H1 to the company because they were working for other companies. But once they got funded, there's a mechanism for them to get H1s. But they're already here versus in India. And you know how long it takes to get H1s these days. But hopefully with the Biden administration, if they are able to get some new laws passed around immigration, if they can get through that, hopefully they'll make it a lot easier to get a visa to be working here. I think it's a lot easier to do that in Canada, and some people use that as a channel to get to the US. So
yes. So guys, please open up for the Q&A. Anything you have, go ahead. I don't think we can actually get Nitin again on his busy schedule for a Q&A. Anything you guys have, do it right now. If not, just put up a Twitter post tagging SaaS Insider and Nitin, and we'll make sure we'll bug Nitin to get that answered for you. Okay. And Nitin, there are a few questions that we wanted to ask you on top of this. So one is, of course, my next question, you answered it right now itself, the new administration, new international program that Biden is bringing in. And other than that, one thing that we've seen is India has a strong technical talent. Okay. But the GTM talent is always, we have to admit it. It's really, more innovative when it comes to the West. So how far are you seeing that people are catching up? How far is the East and the West catching up when it comes to the talent pool?
Listen, so here's the thing. I think there's talent in India. I have talent who works for me in India. I think there's a cultural difference, right? How things are done in India is very different than what's done in the West. Now, in cities where there's a lot of people from US, there's a lot of back and forth. I think people are catching up to it, right? They're catching up to it. But this is where I think having a founder in the US, I think to bridge that gap, right? And especially around go-to-market, and especially when you're selling to enterprises, it's very hard. You can do the SMB part from India, but the moment you're dealing with enterprises, yes, right now everything is virtual, but having a physical presence on the go-to-market side in the US is extremely important to develop those relationships. That the travel back and forth is hard. You need to have boots on the ground for the enterprise piece of it, the strategic enterprise piece of it. SMB, you can hire people and they can get on the phone and you can do it. And I think we're experimenting at First Insight. We're experimenting some SMB type stuff where we're selling services, RCM services from India. And I'm actually looking to invest in. You and I talked about some sales talent, the SDR piece of it in India. But then account executives and those kinds of things, are important to have, local in the US market, specifically about the US market. I can't talk about international, the rest, because I'm not it. But US, Canada, I would say having the sales, the marketing. I mean, you could take a piece of the marketing out, if it's digital marketing, SEO, there are pieces and functions of literally all the functions, to be honest with you. First Insight, the entire accounting, most of the accounting is run from the India office. And are you there? Did I lose you? Okay. Well, I kind of lost my chain of thought, but I was talking about, having local presence in the US. And I was talking about First Insight, we are developing our plan is to develop the SDR piece, but have account management in the US. We do training from India. So lots and lots of business functions can be handled from India. But the enterprise piece, people want that hand holding. So that piece you got to have. And so coming to the US and picking strategically cities that you want to be in is important, and you want to be where you can find people who can mentor you, and you have funds who are willing to help you, guide you, help you get resources, help you hire the right people. That's very important. All right, Chameli, I think I said my part. Is there any other questions?
Okay.
Yeah.
How easier now?
I'm so sorry, suddenly we just lost camera and had to relog in. So,
All right.
yeah, Nitin, one more part that we wanted to ask, I just lost the flow there. So, I just start off from something basic. So,
Yeah.
a new movement, this will actually help more Indian founders to actually move to, US and start the companies there. And when it comes to the, other part, incorporating the company in Singapore and, other markets that you see. So what is your take on that? Because the capital availability on the other markets, how do you see it? Early stage.
I don't have the visibility. So, I mean, I considered the Singapore thing, but it's, I'm not the expert on that, to be honest with you.
Mm-hmm.
All I can talk about right now is, well, if you're going to start a company in Asia, or you want to go to Asia, lots of people start the companies in Singapore or establish an entity in Singapore. I've heard people do stuff in, Mauritius and other places. But I'm not really familiar with that. For me, is like you're coming, I can talk about you're coming to US or Canada. Mm-hmm. I can very intelligently tell you what you should be doing, what you should be looking for. Beyond that, I think, you're going to have to bring a Singapore expert to talk about that. Yeah. But I know a lot of companies that have done that. I know a lot of companies that have established. I'm familiar with the system in Ireland. So if you're going to the Eurozone, EU, a lot of companies establish their presence in Ireland because it's got a very favorable tax system. They've got the resources. They also have talent. They have technical talent and other talent, such as the go-to-market talent. You can find them very readily available, both in the main Ireland and also Northern Ireland. So companies have gone back and forth, and Ireland has done a really great job of creating an ecosystem for companies to come from all over the world.
Yes. And one more part that we've seen, one question that most of the startup founders here would like, because, we ran a poll around, with a lot of 30, 40 founders on what questions you'd like to ask our keynote speakers. And one of this question popped up. So when it's a startup, when it's a seed stage startup, that just has a product or they just completed the MVP, what would actually be a suitable value range for them if the company is actually located in US, or if some founder is there in US? It can be a huge bracket, but you could just break it into parts and give it to us. So it's good for us to compare it.
Yeah. So if you were a SaaS company and you have a good TAM and you can build a $10 million business, which could scale up to, 100 million, whole different valuation metric versus you're going to scale it to 10 and sell it, right? Mm-hmm. So the range of, and again, if you just have an MVP, no customers, no signed LOIs or letter of interest or any early customers to validate your business idea, then, it can range depending on where you are, right? So if you're in Silicon Valley, whole different, valuations, but it can be as low as, like, we're just investing in you could call it a SaaS company, at very early, pretty much an MVP and nothing else, no customers. Mm-hmm. They have to do the validation, and the cap is 4 million. Mm-hmm. And but it's an Oregon company, right? And we're the first investor, and we're writing a check. We're writing the biggest check, right? And because of our check, other investors are coming in, and the company's raising about 500,000. It's still the company, but great potential, but competitive market. Mm-hmm. Typically, what I've seen is the caps will range. If you've got some customers, if you've monetized a little bit, 6 million cap, between 4 and 8 million cap, sometimes 10. But if you've got a team that's already done it before, the repeat entrepreneurs, it could be as high as 15 million cap for a seed round. Mm-hmm. It just depends on there's not a hard and fast rule. I'll tell you one thing about valuation. So people like us who get in early, who really, we take the highest amount of risk, right? And we don't do this. We're an accelerator. You come to our 90-day program and we'll give you $125,000 for 7% of your company. I mean, that's a tall order, right? $125,000. And it doesn't matter whether you are early or you're later early. That's the standard thing, right? And all you're being trained is how to pitch and get your next round of funding, where the valuation just shoots up like 10, 12, 15 caps. That's what you see in these accelerators. So we are, our sort of mentoring approach goes deep, right? So we become collaborators with you. We have experience building these kinds of companies. We have our own networks and investor base, so on and so forth. So the Thai group in the US and Thai Oregon in particular, Thai Silicon Valley, there's other chapters that are like, we can validate through Elevate Thai, validate the company very quickly. And so then the funding happens. But more importantly, you get plugged into people who really can help you, because we have such a great group of investors who are in the fund as executive partners and venture partners. They can really add value to what you're trying to do by giving you guidance and support, which is invaluable, right? Because we don't charge. It's free. Once you get if you decide to bring one of those guys as advisors, great. But in general, you want to look for, don't worry about valuation as much in those very early stages where you're only maybe looking to raise. See, here's the advantage of Indian startups. You don't need to raise that much money. You know that? You can do a lot more with less because your R&D is based in India. Most US companies blow so much money on R&D. And right now there's such shortage of good engineering talent. People are just looking everywhere. They're going to Romania, they're going to Eastern Europe, they're going to Central Europe, they're coming to India, they're going to Philippines, all over the place. So you have a bit of a competitive advantage if you can keep the costs reasonable, that maybe you don't have to raise a lot of money. And so you can be reasonable on the valuation, right? Don't act like you're a US company just because you established a portal there. Be reasonable to find reasonably good investors who will work with you through the process. And that's how we are at Elevate. We are mentor capitalists. We are entrepreneur first. We are your confidant, and we can help you through all stages of your growth and development. And Ganesh is a very good example. RFPI, a great example of somebody very raw, very early, but reasonable on his valuation, and didn't have to raise a lot of money.
It's a very common thing, and I also made that mistake, and I'll be happy to agree that that part, because even when I started my investment journey and pitching to investors, I made this mistake. I just went out with first 10, 12 million valuations because we have customers. They're ready to pay. I have the letter of intent from them to pay, and that was a mistake, because the point is one point is that when we go for that number, what happens is the next round, the impact actually shows up in the next round. And what, here I would like to ask this question, how much is too much, when it comes to
capital?
Yes. So the valuation that I'm putting in, how much is too much, for a first time founder?
If you're going over 10 million, at least in my world, it's too much for me. It's too much. I'll walk away. But again, like I said, there's not one answer to this, right? It's a whole bunch of things that you look at. And I'll tell you that the very early stage, because we are coming in sometimes we're coming at a concept stage, right? And so sometimes you have no idea where this company is going to end up. But if you're only the point I'm trying to make is that because you don't need to raise a lot of money, you're not giving up too much of your company. You see what I'm saying? You give up like 10% of the company. And if you give up 10% in every round, you give up 10%, you're still good. Even if you give up 20%, as long as you're seeing escalation and valuation. So what you need to think about is, before you even talk to any investors is map out a realistic plan. Don't do some spreadsheet analysis, right? Like, oh, revenue is going to double every year, like with no meat behind it, right? So you have to think about what that really looks like and then discount it, right? Because you're going to get discounted. People would discount anything you project, they're going to get discounted. And then see what that looks like. And then put yourself in the investor's shoes and say, and this is where mentoring helps, right? Good mentors will tell you to not overprice yourself. At least with that first, once you get that first check of that first round, whatever that round is, whether it's a pre-seed or seed round, you get validated. And then if you deliver, because you need the money, right? And reasonable investors are not going to want majority of your company. If they want majority of your company, walk. Okay. So people are minority investors. You want to see the quality of the investor, right? Just because somebody's with a big VC fund, it doesn't mean diddly. Most of these big VCs don't make any money, by the way. They don't. And so there's a whole different game that's played in Silicon Valley. Find people who really want to roll up their sleeves and talk to their portfolio founders if you have an opportunity to do that. Or find people who are intentional, who really are looking for, SaaS investments. So, this is a SaaS conference. But and spend time doing your research, use your networks to connect with people, talk to people, all those early conversations to really understand the landscape is helpful, right? But, the more information you have yourself, not hearsay, where somebody says, oh, you should price it. Talk to other entrepreneurs, talk to people that you might know. And if you don't have a network, I say go join the Thai chapter in your city and try to network with them, but find people that you can network with. I'm sure everybody knows somebody. If you're in the tech business, right? You already know somebody that can. Yes,
right. We have a limited time now, so I'll go with the Q&As that people have asked. So the first question comes from Sridhar at billioncard.com. So what advice do you give for portfolio companies like Growth Plug? When a computer like CapStack gains ground or raise a huge round, also focus on one segment that seems lacking in GP.
I understand focusing on one segment, but
so maybe I'll skip up with the next question because we are short in time, and we'll come up with this question at the last. So have you co-invested in India, and which firm do you work with?
I've not written one check in India yet. Not yet.
Okay. Makes sense.
I'm working my way through it, but it's going to start. It's going to start slow. I've had opportunities to do it, but not yet.
Okay. Yeah. Name 3 spaces that you see, in the SaaS market with large TAMs.
Healthcare.
Okay. Yeah.
I mean, I know the numbers are astronomical in healthcare. Look, I mean, globally, the numbers are astronomical. I mean, you could say business process redesign, re-engineering, sales automation. I mean, sales automation has been done 15 billion times, right? That dog is hunted, right? Healthcare is still, there's so much opportunity in healthcare. If you could come up with an idea to solve a problem for efficiency, patient satisfaction, patient care, diagnostic, use the AI ML into healthcare to improve the lives of people. Just look at what's going on with COVID right now. I'm very, very high on, and we have a whole healthcare practice that we're developing, and that doesn't just include SaaS, but that's a big sector. The other thing you want to look at is find business processes that are paper-based right now, where people are using spreadsheets, and automate that. Could be manufacturing, could be in tech, could be anything. Look at what systems that are paper-based, or look at where's legacy, where they're relying on old, crappy, client server systems for disruption.
Yes. And what are all? Yeah, it makes sense. Healthcare is very ripe. There's much more avenues to it, as like dental, eye care. Every single thing. Every single department is a market for itself.
Yeah. No.
And it's kind of a repeat question that we first saw. What are the fundamental criteria that will impress the VC? Is a question from Manoj Reddy.
Yeah. So what will impress me as a VC is you. I invest in jockeys, right? Of course, you need to be in a large enough market. What is your skin in the game? What have you done before you come to me with your idea? If it's just an idea, great, I'll listen to you, but then I'll say, okay, now what have you done about it? So what impresses me is customer validation. Absolutely. Customer validation is the first thing. So if you can tell me about a market that's got a decent size and you have an idea that solves a real problem, and you've had people who validated that saying, hey, if you build, I'll buy it. That's what, and what have you done so far to put together a team? Like who else is your co-founder? And what strength do you bring to the table? Are you a domain expert or are you a technologist? If you're technologist and not a domain expert, then who in your team is the domain expert? Who's got those relationships or experience to build customer relationships? That's the part that's really important. A lot of people miss that. They have a great tech idea, but where's the customer? Where's that piece? That doesn't cost anything,
Yeah.
Most of my successful entrepreneurs come from product management. And
And Sridhar, what I'll do is I'll get this question answered by Nitin, after this session, because we just have 2-3 minutes left. So what I'll do is I'll get this answered by Nitin later, and I'll send you the information.
Yeah.
Yes. And Nitin, thank you so much for dropping in for this. I know it's late in the evening for you, but thank you so much.
Yeah.
Thank you so much for dropping in. And if we have anything, we'll reach out to you guys. Reach out to you if there's more questions.
Listen, just have people connect with me on LinkedIn. Yeah. I'll accept all LinkedIn requests. My email ID is nitin@elevate.vc. Don't try to sell me anything, but I'm giving you my email address because my LinkedIn is kind of blocked. You have to know me, to become a connection with me. But my email is nitin@elevate.vc. Please don't send me a direct email. Connect with me on LinkedIn and tell me that you were on this panel, and then I will accept your invitation.
Yes, makes sense. 100% makes sense. Guys, more reason for you to continuously attend SaaS Insiders events. Okay, any more people we are bringing in, you can get their email address and connect with them.
Be patient with me because I'm going to go on a sabbatical pretty soon. So be patient. You can send me your question. And if I don't respond on LinkedIn, then send it to you and you'll send it to me and I'll respond.
Yeah, I'll do that. Thank you.